Hello and welcome to the Fibonacci free video for Friday, November 11th. This is David, and we're going to be taking a look at Apple here this evening, and I want to look at a few things here, right? So we've got this bounce from last week's low, but there isn't a whole lot of internal structure. It's pretty much straight up. So that really only gives us one set of Fibonacci proportions we can use, and that's kind of looking at the retracements here within this move down. So we can measure from swing high to swing low, and look at some levels. We did bounce today as high as the 38.2% retracement of that move down, and maybe that's where this bounce finishes up. It is certainly a reasonable resistance level, but we also have available our Voodoo lines, which incorporate longer running patterns and incorporating Elliott wave and Fibonacci analysis into projecting levels. Now, our most important levels with the Voodoo lines are going to be these fire lines. They are few and far between. We have one up here by the all-time high in Apple, up near 180 and 65 cents. There's another one way down below at 112 and 72 cents. And the second most important levels are going to be our tree line levels that came into play back here, right? They came into play a little bit sloppy. This isn't as crisp in moving between its Voodoo lines as, say, something like Amazon, but we can still look at this in terms of general patterns and what it might take to recover up towards that 180.65 area, or alternatively drop down towards 112.72. And in this case, we can see, as has been done before, we've sloppily held this Voodoo tree line, and so long as we do, the next decision is going to be up here at the 154.70 tree line. And so long as we hold, or roughly hold, because we note that Apple has been rough in its movement between these levels, so long as we roughly hold these snow lines at 144.79 and 148.58, that does push us towards a decision at 154.70. Now, it may be that we get an early rejection near there. That wouldn't be unusual, and it would need to get back below 138.67 and get resistance below, that is bouncing into a resistance level below that tree line, to really think we were pushing down. We never got that in these previous visits, nor back here, and we would need to see that in order to think this was heading down. So on a short-term basis, especially so long as we can hold these snow lines, particularly if we hold the lower one, right, allow a little dip back below if we need it earlier next week. But so long as that dip holds 144.79, I'm going to look for a decision up near 154.70 as to whether or not we're going to get more of a pullback or not in the Voodoo lines roadmap. And that does, as I mentioned, coincide with the 50% retracement level. I think that could be another reason to pay attention to it. And of course, support above does then argue for a test higher, seeing if we can clear the smaller degree snow lines up towards the fire line. I think resistance around 154.70 might also fit well with what I'm looking for in the indices. We'll go ahead and dig into that when we get into the premium video, but as Apple is a heavily traded and watched name, I did want to cover that here briefly from the Voodoo roadmaps perspective. I think it adds a lot to our Fibonacci analysis. We, of course, will see what happens next week when we see the next trades here, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.